Hello everybody, welcome to Tuesday. Big update today. Lots of participation. Pretty incredible. Today is the first day of earnings reports and they were bad, but better than expected. And so that helped. We also had information coming about cases peaking in the US, UK, and the Eurozone. We've got some other situations where countries are ahead of us in this process and we're able to see what is happening and whether it's working or not. So Australia opened up small retail. Spain opened up some manufacturing and some of the um, construction projects. And China has reported that their imports and exports were a lot better than expected and significantly better than they were in January and February. So these countries are ahead of us. We get a chance to see what's happening, and we also get to see if it's going to work. Do they end up with a big bloom of cases because they let everybody back out? That would tell us something. And so we have these things behind us. This is really a master class for why you need to stay invested. We're much better off trying to find a portfolio that matches your risk tolerance, where you understand how much it can lose at any point in time. This is why we send out these riskalyzed check-in emails. Than you are in trying to get in and out of the market. That's extremely difficult to do. And so what we've done is take those risk bands and slightly shift, a little bit more conservative, a little bit higher quality as things were falling apart, just in the hopes that we could lose less than was expected. And so far that has been true. And then, of course, as things recover, we might shift back and what have you too. So small shifts within that fairly tight risk window seem to work really well to kind of keep people invested, and it's how we make the money long term. And so I want to thank you very, very much for watching, and I look forward to talking to you tomorrow.